Airbnb, let's talk about shares of Airbnb. They're moving lower by about 4.5%. That's following a downgrade to underweight from from Morgan Stanley. The bank also slashed its price target for vacation rental giants down to $80 from $110. They're citing slowing listing growth, occupancy headwinds, and lower room night demand as reasons for the downgrade there. And we had just seen a few of the announcements come through from Airbnb, some of them part of the winter release. But the major move that they're signaling is that going into a recession or going into an economic downturn, there are going to be more people that want to make that extra income. They're trying to tap into that market. However, the street might be seeing some counter headwinds, if you will.
Yeah, I was just hitting refresh on my Airbnb Yahoo Finance chart. Airbnb shares down 51% over the past year, despite really, they've put up some good quarters. Yeah. Market's just not buying it.
Yeah, and by the way, this is not the only sell on this stock, which I was a little surprised by. This is the fourth underweight. Some of them are not from as well-known big Wall Street firms, but nonetheless, there are four of them. And it is maybe a little bit surprising given, I mean, obviously Airbnb has some different things that affect it rather than the bigger travel industry. We have seen strength in the bigger travel industry and airlines and hotels, for example. But one of the other areas that potentially is challenged is online travel booking sites, because they got a couple of downgrades this morning also. Expedia and TripAdvisor both cut to underperform over at Wolf Research, which says that the online travel sector should be avoided by investors. So it's quite interesting here, given what we've been hearing from companies about how strong travel is right now, that you're getting these kinds of calls. The analyst over at Wolf says travel demand is likely to moderate.
You know, this is one that I kind of scratch my head about, because even if they're saying that travel demand is likely to moderate amid a macroeconomic slowdown in 2023, we've heard on the other side of that the golden age of travel that we're entering into. And if there was an economic slowdown, wouldn't people be looking for the deals or doing more price comparison, which is exactly what these services lean into?
Or maybe they won't be traveling.
Maybe they won't.
I mean, people cut back on travel when there's a recession. If they don't have money, they don't go anywhere. So it is possible that we're all being a little too sanguine about leisure and revenge travel and whatever else we want to call the latest phase.
Or maybe that it's just, at this point, winding down in that golden age of travel. Maybe we've already hit peak golden age.
Who said these were boring markets? Look at all these movers we fit in here today. What are we, like 8 or 9?
Who said they're boring markets?
I mean, I don't know. It's not earnings season anymore. It's December. It's the holidays. You should be hanging out with Santa, buying gifts and stuff. But we fit like, I don't know, 9, 10 movers.
You should be watching Yahoo Finance.
Besides that.